In this video, we're going to break down the sectors of the S&P 500. There are around 2,400 companies that you can trade in the stock market. With that many options, what makes you choose one over the other? Instead of looking for a needle in a haystack, it's easier to look at the bigger picture. Economies are divided up into sectors and industries. Sectors are large segments that are based around a common purpose, while industries are a group of companies that share a similar business model and often compete with each other. Some people may reverse the language, but when you're talking about the stock market, sectors are always made up of smaller industries. For example, healthcare is a sector. Within healthcare, you have industries such as pharmaceuticals, health services, and health insurance. While these are all based around healthcare, companies that develop medication are very different from insurance providers, which are also very different from hospitals. Overall, the S&P 500 is comprised of 11 sectors. If you remember from a previous lesson, the S&P 500 is weighted based on market capitalization. This means that the larger a company is, the more weight it holds. This results in the S&P 500 not being equally weighted across all sectors, which means that instead of looking like this, the weighting actually looks like this. You'll notice at the top is tech, with 28.1% of the weighting. This is because Apple and Microsoft are by far the largest companies in the stock market. At the bottom is utilities, with only 2.6% of the weighting. This means that if you invested $100 into the S&P 500, $28.10 would go to tech, while only $2.60 would go to utilities. The problem with this is, it doesn't allow you to benefit from the performance of smaller companies. Just because tech companies are big doesn't mean that other companies aren't successful, because there are obviously industry leaders in each sector of the economy. Each sector at one point has had the highest ROI percentages. But if you only invest in the S&P 500, your portfolio wouldn't necessarily benefit if the smaller sectors delivered record growth. To solve this issue, there are ETFs that allow you to individually invest in each sector of the S&P 500. These allow you to customize your investments by giving you the control to overweight or underweight particular sectors based on your own investment goals and strategies. This is how we're able to cut the underperforming and high volatility sectors while keeping the top performing growth and stability sectors. This is the core of our sector investor strategy.